Hello, 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 and Garth, welcome. Wonderful to have you online. Deeply appreciate you coming to share. You've clearly got something that people want because a couple of hundred people, over 250 exactly, are here to join us tonight to learn from you. So thanks very much for your time. Deeply appreciate it.
Hey, hi, Scott. Hi, everybody. Nice to be here. No pressure at all. How many you say? 200?
263 to be exact.
Good. I'm glad there's that many people interested in what I've got to say. That's awesome, man.
Awesome. Well, listen, I firstly appreciate you being here. And for those who don't know, from all over the world, there were big floods where Garth lives. So had some chaos last week with the flooding. So really appreciate. Yeah, I know we had to move it by a day to accommodate the flooding, etc. But anyway, thanks for being here. It's I really appreciate the knowledge that you've got to share with our community.
No, absolute pleasure. Yeah, the flooding's been quite something. And I mean, even just getting back from the airport today on time turned into a bit of a nightmare. But yeah, it's what it is. And yeah, pleasure to be here.
So let's rock and roll. Let's get started. So I want to share my screen here quickly, just get everyone in the room. Let us know where you're from. In the chat box, always nice to know where everyone is coming from. So I should have my screen live. You should be able to see it. So the whole idea tonight is the Family Office Masterclass, Unlock the Secret to Generational Wealth. And I think what is important, if I take you through it here, I want to kind of ask you 3 questions before we get started. I want you to ponder these and just think them through while you hear what Garth is talking about. So this is about getting you in the room. The first one is, what would it mean to you in 12 months or less if you could be earning at least $5,000 passive income without any hassle or complexity? What would that mean to you as an individual, to you, yourself, your family, etc.? Just take some time to think about it in terms of the process. The second question, how would you like a system which could statistically help you get there 5 times faster, simpler, and safer? So again, just think that one through. And finally, once we're done, I'm going to share with you a way that you can actually do this. So our whole philosophy is to live a life unlimited, and we believe that you do it through diversification. We believe that diversification, and it's all about the passive income, which sits at the middle between countries, currencies, assets, partners, and time, is really what is the key. And I just wanted to give you a sneak preview, and I will drop the link in the chat box. We are actually doing a 5-day challenge. So tonight we're going to go deep in one area, but actually we've got a 5-day challenge coming up on the 23rd of October, which I would highly, highly recommend that you come and join us for. So I'll chuck that in, but I'm just literally giving you a sneak preview in terms of that process. I want to start to engage you quickly. And I want to ask you, do you know what a family office is? And if you could just say in here, yes or no, it'll be very interesting for all of us to get a indication as to how many people know what a family office is and how many people don't know what a family office is. We've got a couple of no's, quite a few yeses. It seems to be sort of 50-50 between yeses and no's. So just in terms of understanding the overall process. Thanks very much for all the engagement. I wanted to share with you just a quick video. This was actually Garth and Anthony, one of the people that works with Garth, and they were actually sharing for our mastermind. They were sharing what is happening. This was right at the beginning of the year. They were kind of reviewing where the world was going. And I just want to share with you quickly what they actually said in this video. So just 2 seconds here.
This doesn't change, guys. Asset allocation, and this is not all of the asset classes we work with, but asset allocation is going to account for 85% of your return and is the fundamental building blocks of asset management and a financial plan that's going to produce income or anything. But Anthony's going to talk to this, and this will give you very specific kind of views around the returns, the averages, and where we think the value lies.
And it's so interesting because when you take this, and Anthony
doesn't change, guys.
Very kindly, Anthony actually did a presentation for us, because although this makes simple sense in terms of English, 85% of your long-term returns come down to your portfolio construction. And Garth, with all due respect, when I chatted with Anthony and Alex chatted with Anthony, we were like, okay, that sounds wonderful in English, but how do you actually do it? Like, what is the process? And one of the greatest gifts that I've been given this year is this partnership that we've got with yourself and with the mastermind, where each month Anthony's taking us through the different assets, what's happening. I've learned a tremendous amount in terms of the overall process. And the final thing I wanted to say was just to kind of get everyone in the room in terms of, who you are and where you come from. So you're one of the co-founders of Calio and the CEO. And I'll let you talk more about it in terms of, the family office and what it is and how it all works, et cetera, et cetera. One of the things that I was intrigued by, and you and I have known each other for the best part of a decade. One of the things that you said to me fairly recently in the last sort of 18 to 24 months was something along the lines of this. The 1% can pay for advice and get results. We need to support everyone else to get access to the same advice and results. And I deeply, deeply appreciate that just that stance or that understanding. And that's really why we're here tonight in terms of the overall discussion and wanting to share. The final thing I wanted to say is that we're not going to be sharing any financial advice tonight. This is all a knowledge-based, learning-based exercise. And, I don't know, I don't necessarily speak for Garth, but at the end of the day, we really want to empower people with access to knowledge. And so without further ado, you certainly haven't come here to learn or listen to me. And I wanted to kind of get straight into it, Garth, with yourself. And I'd love you just to kind of share with people, who is Calio? What is Calio? What is your background? How did you get here? Et cetera. Because I think it'd be very good for people to kind of just get a context of your background so that they can understand where we're going in terms of the questions going forward.
Sure. Okay. So I started way back, studying a BCom, and then I went into my first business, sold that business at 24, and I became increasingly interested in the financial planning facets. Having been around money, and I felt compelled to pursue that, and I set up a franchise of a large insurance company, and I was in that for 10 years. But there was a fundamental problem with the way advice was being given, and what was perceived as wealth management, and I felt during that decade that I was in that insurance company where the objective was to sell insurance products and commission-paying investments. I got a strong sense that a lot of the financial industry had a very parasitic approach to it, and not a symbiotic one. It just wasn't hitting the key. So I moved from that franchise, sold that after 10 years. And I had a strong influence in the asset management space with Stanlib Asset Management, at the time, the merger of Liberty Life and Stanlib, and they formed the asset management division. And I worked very closely there with Paul Hansen, and I got very familiar with asset allocation and the driver of returns and portfolio construction. That then merged when we went to Sasfin to start the private client advisory division. And the private client advisory division now took all of that asset allocation portfolio theory and it merged it with the private equity division. And what that means is we were now able to look holistically at wealth management, not just in the financial services space and the listed instrument space. We were now able to also look at businesses, exiting businesses, creating wealth from exiting businesses, and then taking entrepreneurs and still having them involved in businesses. So that was at Sasfin for 4 years, and we built the skeleton and the foundation of Calio Capital, the business there. And after leaving Sasfin, we started the business with the idea of building a multi-family office and a similar business to a private Swiss bank, where we'd have a very personalized service, limited number of clients, and really offering specialized access and deal flow and multi-generation planning. So very, very much built over that 20 years, and then creating the skeleton, which we then executed over the last decade to build Calio Capital into what it is today.
So tell us, I'm just going to keep putting up the questions just so people can see them, and then I'll take the screen off. But what is a family office? You know, you've said a multidisciplinary family office. You know, what is the, well, firstly, what's a family office? Secondly, what's a multidisciplinary family office? And thirdly, why do you believe Calio is different from necessarily the other ones that are out there. Assuming that, 50% of the room know what a family office is and 50% don't know. And by the way, it's got nothing to do with wealth from my experience. As in, people with or without wealth don't necessarily know what a family office is.
Yeah, look, a family office initially, in true terms, a family office is an in-house asset management company. You've got a high net worth individual with multiple businesses in his portfolio, multiple tax problems, and the family office comes in to manage that entire estate, comes in to manage the accounting, the tax, the structures, and it's essentially built around the wealth of one individual family. I think we were one of the first to coin the phrase multi-family office, and going back to that 1% can afford the advice. My realization was, several families, and today it numbers, between 65 and 70 families. Several families could benefit from a pooled resource that had extensive global reach. And that's where the multi-family office concept came from. We were able to take what would normally be the preserve of a single family and create multiple touch points, particularly in Calio, multiple touch points from soft elements to the hard elements, and create, a holistic overview of any family. And the cost of a family office is exorbitant to build. So we built this where multiple families would create the bulk and the fee sharing to make it affordable for a much greater audience. And then also to use several divisions of what was a family office. And then certain people that didn't need the entire family office were then able to plug into these various levels and various offerings within Calio. So by building the family office, we were able to build 5 or 6 opportunities below for different levels of wealth and different stages of a family.
And tell me, in terms of, it's just interesting what you've just said, because I think, that little picture that I had up, which was kind of, what is a family office according to Investopedia? And it pretty much said you need around $250 million. And it's quite interesting because in many ways, it's what you just said. Like maybe you need $250 million if you want to do it all on your own in-house. But with a multidisciplinary one, and you've just mentioned, I'm sorry, I'm repeating it on purpose for people, you've got about 60 to 65 families that you work with. That provides the ability for, basically cost cutting is the best way, and shared resources, in terms of that process. There's something else for me that with Calio I think is also important, which has been your kind of focus on not only the different levels or the different segments, but also to some extent on business owners, entrepreneurs, because that's sort of tended to be your background. What do you think differentiates you from the market in general, from other people?
I think our biggest differentiator is, we are entrepreneurs who have built several other businesses outside of just the financial services side. So by having a very strong understanding of the entrepreneur and the typical person that builds a family office, we're able to actually understand the mindset of the entrepreneur. We're able to understand from a personal contact point of view with wealth what we're preserving. So for me, I'm very comfortable in dealing with that, that complexity of buying and selling a business, that complexity of how to structure a business around a family. So I think the differentiator really is the fact that we've done it ourselves and we're involved in the same conundrums and the same questions. It's not theoretical for us. We're actually dealing with real situations that we have experienced, and we understand the emotions, because 95% of wealth management comes down to controlling the behavior around the money and then building the plan and sticking to that plan. So once you understand the behavior, once you understand the family business and what they're building and what they're doing, you're better able to build from experience ourselves proper, executable and manageable plans.
I think there's one other thing which I enjoy about what you guys do, and that's also with two things really. One is the global aspect. And so, people have, you've got licenses and offices in America as an example, etc. And so the people are not stuck in one box. So, we're going to come to this just now, but, generally what I've experienced with all of the high net worth clients I've worked with, when they go meet most advisors, they get kind of put in one box. It's like, go to the Mauritius box, go to the BVI box, go to this box. Whereas you guys are much more able to kind of look at it from a, where in the world should someone be, and then be able to help them no matter what the right solution is, versus trying to stick them in your box. Does that make sense?
Yeah, I think, I mentioned that in the early days, I found the industry quite parasitic. Whereas Calio is always focused on a symbiotic relationship where by working with the client and finding solutions, you see, we no longer have to put anybody in a box, because we don't have a fee sharing relationship with a Mauritian trust company or a Isle of Man trust company. The solutions and the structures are driven by that family or that person's specific global influence. So you say I don't fit everybody in one box, but I actually do. I'll put them all in one globe. We're living on a global village at the moment, and when you meet a family, whatever ties they've got to other areas, whatever investments they've got, has got consequences in that particular jurisdiction. So you cannot make somebody's plan fit into your box. So by realizing that, I was then able to, over the years, build up such a AAA rated network of people in all of the sectors around the world, and build these offices in America, Switzerland, Mauritius, South Africa. And we were able to then use what was relevant, not what we had or what we knew. So we're now able to advise from any corner of the earth or any corner of the globe what opportunities exist in that space, or to do the research at a level that no client can do. And that's the real benefit of the family office, is that global network to create solutions linked to every sector of that person's life and the next generation, and where they might live or are living already. Because action reaction is so relevant in financial management because of the complex tax situations. So I think it's important to really have the network to be able to structure different plans and customize plans for what you're picking up in the consultation process.
Yeah, I love that. Let's go to that, and we there's more I want to go into there, but we're going to get it in the questions to follow. So for me, sustainability is a really important one, and you've already mentioned sort of long term, and I think most people that understand wealth and investing will understand generally you have to think long term. So how does a family office ensure that wealth preservation strategies remain adaptable and effective in the ever-changing financial environment? Again, you sort of mentioned 95% is emotion just to start off with, but we live in chaotic times. It doesn't matter where you look in the world or, what asset class or whatever. And so how does it work in terms of this wealth preservation strategies, and, why specifically do family offices assist people to achieve, the goals?
Yeah. We talk about this ever-changing financial environment. I mean, I think there's decentralization of the financial environment, and people have more access to education. But, I think macroeconomics are still driven by supply and demand, and, counter-cyclical economic principles. So, I mean, to put it in simple terms, financial markets and the world hasn't changed that much. I mean, a lot of what we're seeing today, yes, it's faster and it's more available and you can work quicker. But I think staying on top of it and having such a vast network, we're able to really be on top of Web3 and what Web3 can offer. And, we're not ever going to fear change. Our whole philosophy is to try and make anything and everything work, find reasons to make it work, not reasons to fail. So when I say it's emotional, we're still facing exactly the same decisions, and it doesn't matter how complex the world gets. You've still got the same behavior of, greed and fear. So whilst the markets are changing, the sustainability and the building of time-based portfolios, you're able to put everything in a portfolio in the right column, or let's say in the right bowl that it needs to be in. So if you think the world's changing and you want to be part of that change or part of the global trends, there's a time and a place to have that in the portfolio and phase into that. But, you know, more so than ever, where we see the world changing, the last 2 years, we've seen this massive flood back to, you know, to value. So yes, the world does change, and it changes quicker than it used to, but the financial principles are still the same. The portfolio construction that I learned many years ago still holds true today. It's not to say I'm outdated at all. You know, we spend a lot of time on, you know, investing into Web3 technologies. We own a company and are invested heavily into understanding how these things can change our world. And, you know, being open to that, being open to the new ideas, and having that investment into the super trends, I think that's where the sustainability comes from. I also think within the business, having multi-generational advisors, so that you've got people of different mindsets, and, you know, younger generation also talking to the up and coming generation, so that the merger or the transfer gap between older generation baby boomers, X generation, and right down to Z, and, you know, we're seeing the transfer of knowledge, and how to get the younger generation to realize a lot of these principles still hold true. And that's the only way you can create sustainability. So when you deal with a family and you've got a wealth creator, the transfer of that knowledge into the modern day principles remains critical. So, I mean, it sounds very complex, but it's really the same driving motions behind families and wealth preservation and sustainability of that, but education of generations and those that are going to come in, because you've got a, you know, you've got a tendency to see children inheriting wealth, or the younger generation inheriting wealth, and the first thing they do is change advisors. And we're so aware that, you know, when somebody inherits wealth, then they want to work with somebody that's their age. So we've made it, you know, a big focus of ours to be integrated into the whole family, and also at Calio to have multiple touch points and different mindsets in the organization to speak different languages. And I mean generational languages, not physical languages.
It's brilliant. You spoke there of the 6 super trends, and I know you shared them with our mastermind in February this year. If we have time, because I don't want to divulge off the family office concept, but maybe we can come back to just touching on those, because I do think they
hopefully you won't miss my humor this time.
So let's go to planning. And, you know, it's interesting when you look at the stats that are out there. You know, most people don't have a plan at all. Even those that do have a plan are pretty inefficient at actually implementing on their plan. You know, how do you guys run? You know, if someone comes in and they sit in front of you and you say, right, you know, let's understand it, and, you know, how does the tailored financial solution work? Can you walk us through the kind of the process you guys take, how it works? You know, I've had a number of, over the last 10 years, high net worth clients come to you, and I've only ever had, you know, good feedback, which is always fantastic. But I'd love you just to kind of explain in principle what happens. Now, arguably, not everyone can get to have a meeting with Calio. I understand that. But, you know, one of the things you can do in life is that if you want to be successful, you can copy successful people. And so why not learn what, you know, the top 1% and arguably the top 1% of the top 1% are actually doing? So, yeah, I'd love you to kind of share overall kind of how the process works.
Yeah, I mean, for me, the consultation process and patience around planning is the most important. I think people rush, you know, particularly when markets are down and, you know, they're anxious, they want to rush into a new solution. But for us, the consulting process and the values of the family and what drives the investment thesis is the most important. And, you know, over the last 2 years, a lot of our focus has actually been on the consulting side of the business. So when you deal with a family, we might even go as deep as, you know, going into Enneagram studies of the family. What are their personality styles? How do they make decisions? Who are the drivers? Who are the decision makers? Who are the analyticals? So we know the strengths of the family. So, you know, I meet a lot of people and I say, you know, let's say the guy's 55 or the woman is 52 and they're extremely successful entrepreneurs, and I meet them. You know, I always say to them, you've taken, 55 years to create this wealth. If we spend a year planning, so be it. But if you get the principles right in the consulting and you put everything down first, so very extensive consulting and understanding the history of the family. Families that have created wealth or multi-generational wealth, there's a lot of pride. I mean, we've even written books around the wealth creator, the initial wealth creator. So those principles of consulting upfront, and then really having all the information to start drafting what we call a financial architectural plan. Because remember, a family office is effectively a touch point for all financial matters. It's a single touch point where we can coordinate everything. So people can get on with living their life, running their business, and then you've got this outsourced financial director. So before we get to that management, the consulting process of building that asset map, building that directional map. And once you've got that blueprint, then it becomes easy to research the customized solution and put the right knowledge into the various blocks, and then maintaining it, and after implementation, maintaining it. But in the analyzing process, I mean, it's also our objective to try and work with what we've got and not turn everything upside down. And I think that's the problem. Too many people come in, they're expecting a radical change rather than radical planning. And that's the thing. It's, there's no quick fix. Family office is about solid governance. It's about solid tax structuring. It's about getting things in the right places to work so you can make investment decisions, not tax decisions. So the planning process is meticulous, and then just constantly improving, strategizing, and working with the global advisors to make sure that, whatever's new out there, if there's a change in the Dutch legislation on a foundation, you've got all of that information to move left or right. And I think that's the critical thing, plan and a lot of the maintenance, and not forgetting to, sort of take a rain check on what you did plan to see if you're on track, ahead, behind. And then, I think that's really the secret to a family office, is that constant adjusting and working back to the plan and seeing if you're on track, or, evolving a new plan if necessary for each sector.
Look, this next question sort of ties in with this already, and we've sort of covered it to some extent. So there might be a little bit of repetition here, but I just wanted to kind of find out for you, because I think one of the things that I know appeals to most of our mastermind and our high net worth clients that have met with yourself is the fact that the financial solutions are highly personalized, and again, transformative, not just for the individual, but for the family. Can you talk to us a little bit, because I meet people all day long, like you do, and they've kind of spent, and I'm going to kind of put into context what you just said there with the 30, 40, 50 years. They kind of built over time. They've kind of built, they've got some shares, and they got some annuities, and they got a house in London, and they got one in America, and they kind of got all these little pieces all over the place. And it's kind of often been done in quite an ad hoc way with no sort of overall, as you just said, financial architecture. And I'd love you to talk through that kind of process because again, the feedback I've had from the clients, they love the fact that finally they got one architect. So like if you imagine building a house and you've kind of been building it piecemeal for 30, 40 years, and now there's like one architect, one project manager, which for me is kind of a metaphor for people to understand. But just talk to us a little bit about that personalization. You've already mentioned taking into account the enneagrams and all that. I get that, because literally everyone that comes to see you has almost created things in an ad hoc way for many, many years, I assume.
Yeah, you see, the problem is, wealth is like that dream house that you're constantly building. But what really happens with people is they build one room and then they add a bathroom on, but with a different architect. So, you've got a Cape Dutch style with a modern glass house on the left. So, and this is what happens with portfolios. It's the person's trying to build a dream house, but they very seldom have a blueprint up front. So we have used that analogy of the architect and, Calio being the financial architect and really drawing the blueprint. But now, if you go to an architect, you tell him what you like, you tell him what you want to do, you tell him what you want to build, and you tell him what style you want to build in. Now, like the financial planning side and the personalized structures are no different. A person might be a farmer, a person might be a high you know, high moving tech giant. And with that comes totally different objectives, and, you know, totally different, you know, even the children are going to grow up differently. So imagine, you know, I'm building a personalized plan, this blueprint for a farming family that's got children that some want to break away from the farm, others want to take over the farm. That's a vastly different house that I'm building to one which is, you know, globally orientated all over the world. Now, I'm not talking about the portfolio, I'm talking about the life. So the personalized side is so dependent on those values, and, you know, whether that person is a high impact investor, wants to create jobs, really wants to make a difference to a South African economy, the US economy, or, you know, whichever country they live in. So you've got a lot of, you know, a lot of focus at the moment on very different investing principles. So that's where the personalization comes in, because some people have a particular focus towards global food shortage, and that can drive a different house. And when I talk of the house, it's a metaphor for the financial plan. So without that consultation process, you can't even begin to build a personalized plan. That you might use the same bricks, that you might use the same window supplier, or, you know, the tiler or the bathroom contractor, all being metaphors, doesn't mean each one will have the same size room. They will be very different, dependent on, you know, where that person lives, how they live, where their children live, whether their children are going to America, whether they're staying in South Africa, you know, whether they're based in London, or, you know, all of those things are going to drive what that plan looks like. But the big difference is that we can gather that information. And even in the business, let's say, you know, there's a family business, we're able to advise on the business exit, whether that business is going to be transferred down, whether we're prepping that business for sale or an exit. You know, there's two inevitable ends to a business: acquisition or liquidation. So we spend a lot of time in, you know, corporate consulting on the businesses as well, to make them efficient for exit in 7 to 10 years. So all of these are the driving factors, Scott. I mean, it's, you know, it's so varied. That's why you can never end up with one size fits all. Even, you know, if there's one brick manufacturer in the world, you're going to buy a different amount of bricks.
Yep.
So we use a lot of the same components, but they're always different.
I love the metaphor of a house, because I think everyone kind of gets it. And often, you know, wealth and finances and money is, you know, quite an opaque thing that people don't understand. And so it's a lovely metaphor for people to have a better understanding. Let's delve a little bit into some of the principles. So, you know, wealth management, you've spoken about, let's call it portfolio construction, and, you know, all of these things. What is some of the essential principles of wealth management within the framework of a family office, and how do they contribute to this multi-generational prosperity?
Sure. Simple questions, eh? You got to leave the question up. This is the first time I'm seeing the question, so you got to leave them up, because I forget what I'm answering. Nah. So let's talk about expert principles. I mean, you know, expert is really an extrapolation of experience, and with a lot of experience, you know, you start with structuring, particularly in a family office, structuring and governance. And under structuring and governance, you know, we're looking at housing a person's wealth in the most protective manner. The risks of taxation, the risks of unknown death taxes, estate duty, all the same thing. You know, between the US, Europe, and South Africa, different names for the same tax. So you've got to think, you know, 10 to 20 years for the wealth creator now. And then you've got to be thinking, you know, 50 to 80 years ahead in structuring. So these principles are always driven by structuring first. Okay, get your governance right. You'll be surprised at how many high net worth people have bad governance. They're so busy creating wealth, they often don't get down to the simple governance of wealth. Okay, so this can be as simple as the will was last updated when the person was worth 20 cents, and now they're worth, you know, 10 billion cents, and they haven't updated their will. So, you know, the governance first and foremost. So we deal with that. Then we deal with the structure to house what a person needs to invest in. Then you start applying what has the person got that you spoke about. And what can we save? What can we use? Where does it fit in? That's the asset consulting side, where you're really focusing on what the person has, and is it good? Is it bad? Is it performing? Why is it not performing? Did you just, add it on at the wrong time? And that's the important part. And then also, one of the most important principles of wealth management is, where are you at in the world at the time? Now, what I mean by that, let's jump back to this analogy of the house. What you don't do when it's raining and there's lightning and there's thunderstorms, you don't go rip your roof off. But that's exactly what people tend to do. So, when I say you've got to look at where you are in the world at the time, are you in this high interest rate, high inflation environment? And what are you doing short term versus long term? Because when you implement a plan to build a house, you can't necessarily, you can't start with the roof and then build the foundation. So you build the foundation, get your structures and everything right, but you don't react to where you're at in the market. You must understand where you are in the cycle of a market, and where you are in the cycle of, the current world situation, and then have your short-term goals and then your long-term goals going into it. So that multiple level of planning, short-term, medium-term, long-term, to ultimately build the house. And that can take as long as 5 years to get everything in place. And that's driven by where you are at and what your entry points are. See, I forgot the question by the time I'd finished answering it.
No, I think you've nailed it. And, in terms of, if I just look at it here, the whole idea is, what are the kind of the wealth management stuff, and you've covered it. What are the key principles, and whether someone does it with Calio, or whether they do it on their own, or even if they go to someone else, you're sharing the key principles that the wealthiest people are using and being advised to use, and so people can copy them to get, arguably the same results in terms of it. So
yeah, for sure.
I'd like to. Sorry.
Yeah, sorry, carry on. No, I was going to just add something, but it's fine. Carry on.
So I think this one for me is quite important, basically. And, as part of our diversification mastermind, something that I didn't realize, I know it's common sense, but it's kind of a pattern that's come up over and over again, is that people join the mastermind and then they really kind of want to be able to share it with their children and ongoing. And I'd love to kind of understand, you've kind of brought up a few of them already, in terms of having different age groups within the family office, so that people can kind of resonate with their age group, etc. But what else can one do? Because it seems to be a massive problem that people have. And again, I'm only speaking from my own experience, where people are coming constantly going, not only do I want to protect my wealth, not only do I want wealth preservation, not only do I want to diversify around the world, etc., whatever their needs are, but I also want to not only hand it to my children, but also want to teach my children so that they can, use it and grow it themselves. And I'd love to kind of talk a little bit about this, because it's really a very big burning issue for most people that I deal with, basically.
It's one of the toughest ones. You've got to create interest, and to create interest for generations, they've got to have a personal touch point. That's why we go into a lot of that family interviewing and really understanding, where and what the skill set and interests are in the family. So education is absolutely key. And, it's one of the reasons I think you and I have had a great synergy in working with people, because I think you provide a great platform for education. You provide a great platform for understanding. So that, prior to this, we've always, focused heavily on the education, and particularly on money not being a taboo. These money grams that you get, money doesn't grow on trees, and mustn't talk about money. I think money needs to be totally decentralized and totally open and available to everybody. And I think the more you plan, and the earlier you start involving the generations in that planning and what's going on and the principles of it, but in a way that is enjoyable, and in a way that is not, like this is like homework I've got to do. So, we've taken a lot of big families and created positions within that family of wealth, wealth preservation, where they've got a role, or they've got, they're researching. And often they might be interested in, let's just say, something like Bitcoin, and that's a way of engaging with them and getting them involved in a sector of it. And how can these things really become tools in the in the investment world? So I think knowledge is everything, and I think just knowing when to start involving the different generations, and when to touch those hot buttons on getting people in there.
Look, it's something that I feel very strongly about, and one of the things you might mention there is the education. And through the Wealth University, we've created a whole bunch of courses now that are effectively home study, and and again, giving people the substance so that they, again, if you want to build a tall building, you have to have a solid foundation so that they can. But again, real world knowledge, not what you're going to learn at Harvard or UCT, like actually, in terms of actual investing. So it is just something, if people are interested, reach out to us and we can let you know. I want to delve into this here, which I think is really quite important. Basically, now you've kind of now we're kind of future proofing and we're looking towards the future. And I'd love you to share your insights into the evolving role of the family office in terms of securing long-lasting family legacies. And why I say this is because you kind of maybe 100 years ago you had Henry Ford, just to use an example. And he would have his own family office. And it was, as you've already mentioned, it would be sort of a whole bunch of people working for one family. And then over the last 20 odd years, and you guys were one of the first people to adopt this, was the family office. So where you're actually helping multiple families, etc. Where do you see this going over the next 10 years? Because, again, my feeling is that traditionally you've only been able to help the highest of the high net worths, because there's a lot of time involved and it's one-to-one and in terms of that process. But how do you see this evolving over the next 10 years as we've got better access to technology, better democratization, etc.? Yeah, in simple terms, back to your statement, the top 1% have access to the knowledge and the investments, and we need to enable others to get access. How do you see that working over the next 5 to 10 years?
I just type in your question to ChatGPT and get the answer. Ask it to write an essay on what you should do. No, Scott, look, I think family offices in their traditional form are going to evolve, and they're going to evolve rapidly. And, a lot of the information will be more readily accessible. But where the problem is going is that the world is getting more complex from a tax point of view, and a lot more interconnected. So some people will have heard of the Common Reporting Standard and, worldwide taxation and stuff like that. But very few people understand what that means. And now where we get to, children moving and living all over the world, and, this enabled generation of being able to travel at a moment's notice and affordable and having the means to do it and, get around. It's got all sorts of tax consequences when you flit in and out of a country for a year or two, and it leaves all sorts of problems behind. So I think democratization and where the world is moving, a lot of the services we have and a lot of the stuff that we do, I think will become more readily available. But even with the knowledge, how to put it together becomes the problem. So I think the supportive role of family offices in disseminating all of that information will still remain as viable. And I think more and more people will become intimidated by the global world. So I think that is where our focus on the consulting has remained very important over the last 2 years. How to keep a person sane in the amount of information, the amount of financial overwhelming information that there is out there, and how to still keep it, to a relatively simple, basic structure. So it's going to change, and people are going to be able to have a lot more access, and that is a great thing. And I'm all for that. I want people to have as much access to information around this, because I think this industry's been built on smoke and screening and mirroring. And I think that transparency is great, but it's still so complex. So they still need a touch point that can put it together, that can put that information into a tangible plan. So I don't see that changing. But yes, will we build decentralized platforms where people are able to just slot in what they need off the planning phase, and much slicker, much faster, options and optionality? Definitely. And I encourage that. I hope it goes that way.
It's interesting what you just said then, sort of two comments. The one is Roger Hamilton has a great saying where there's plenty of knowledge on the internet, and you've just mentioned Chat GPT and everything. But actually what most people need now is direction, because those are like, what's true, what's not true, etc. So, what you've just said for me is that family office and that partnership kind of, is almost like a beacon of light to make sure you keep going. It's that lighthouse that helps you keep going in the right direction. Because again, there's a plethora of information that's not hard to get, but it's also the right information and that direction. And the second thing for me is also the condensed information. So most people are very time poor. They're particularly wealthy, busy people, are already running, and time's already their greatest challenge. And one of the things Anthony does, Anthony Spartacalio, for our mastermind every month, is he literally comes, I call it a TED talk. He takes everything happening in the world market and he gives it to us in 18 minutes, plus minus 18, 20 minutes. And it's like, right, why did Silicon Bank go bankrupt? What do I need to know about UBS? Why are interest rates going up? What's happening with inflation? What's the impact of China? Is it BRICS going to have a big impact? Whatever it is. And then we can ask a few questions, but we don't have to read a 400-page report or go on a 4-hour, webinar. And I think most people, that condensed time is actually more valuable to them than almost anything, because they get to understand the important things to be kept up to date on a monthly basis, but they don't have to go and spend a month researching all this stuff.
Yeah, that's the problem, Scott. I mean, it's the more information you get, the more intimidating it gets. Because you can work out, you can find out how to build a car, and you can, ask Chat GPT to write an essay on building a car. Doesn't mean you're going to be able to build it. And I think that's very important. And I believe that's where the human element is becoming more and more important. I mean, we were involved in building one of the earliest robo-advisors. I mean, this is over a decade ago. And the robo-advisor, when a person was asked to enter all of the information, it did give them a great start to understand their position and what they want to do. But it didn't allow the consulting process to actually have a holistic wealth outcome, or how to pass that on to a generation with the nuances of behavior and the nuances of personality. So I don't think, being able to do it is going to enable you to do it.
Yeah.
So able and enable are two different things. You'll be able to do it, not enabled.
I love it. If people see me looking down, it's because I always take lots of notes. So able and enabled. I love that. Love that play on words. It's such a clever way of looking at it. So we started talking a little bit earlier about entrepreneurs, and you've always been fairly direct with entrepreneurs, and as much to say that, we're not, and I'm an entrepreneur, we're not very good with our money themselves. Talk a little bit more about that from your understanding of like entrepreneurs and kind of, because you've already said you come from an entrepreneurial background, you kind of help them. But why are entrepreneurs good at creating money, but not necessarily building portfolios, building legacy, handing it over, etc.?
I've got a great friend. I won't mention his name. And he said that to me. We were fly fishing in the jungles of Gabon, and I think he was making his fifth fortune at that stage. And he said to me, Garth, geez, I'm so good at making money, but I'm terrible at keeping it. And then, I mean, that nails it. An entrepreneur is probably the worst person at investing, because an entrepreneur starts, he builds a business, and what happens with building a business? He forgets how long it takes to build the business. He forgets how long it took him to acquire that cutting edge knowledge and that competitive edge. And even a quick business, is 5 to 7 years to really establish. And I mean, a lot of people only hear the story as a written book after it, and then it's sensationalized. But to build a business of any substance can take 7 to 20 years. And when an entrepreneur's made money, he only thinks at the end of the road and the results he was getting. He doesn't realize the journey he took to get there. So when he starts investing, he's expecting an investment to have the returns he was getting in his 15th or his 16th or his 20th year of business. He forgets that a passive portfolio, passive income is not there to compete with his role as a business in its mature stage, which is running, if it's a good business, at 20 to 25%, year on year growth in profit. And I mean, that's an exceptional business in this environment today. So the problem with entrepreneurs is they make decisions. They also don't realize that not everybody is like them. They represent a successful family. A successful entrepreneur represents less than 1% of the world. For every one entrepreneur that succeeds, there's literally millions of people that don't. So he doesn't realize that not everybody's like him. So he's got this very strong, driven agenda around how money should perform. And I always tell entrepreneurs, when you're managing money, it's about it working when you're not working. You don't have to work for this, but it doesn't necessarily have to compete with those returns, because we're playing in the space of preserving wealth. We're playing in the space of generating income, and only once we've taken care of income and preserving wealth do we get to this growth portfolio which competes with their business. And that enters in that whole different realm of alternative investments and private equity, where entrepreneurs want to be in that space. But even then, that you're taking risk on another entrepreneur, and that's where the process of due diligence becomes so important. So that's why we appeal, to the entrepreneurial market. One, we often sell the businesses and create those businesses for them, those exit from the business, and then we spend a lot of time training them how to invest and behave when the markets are up or down.
The question probably everyone wants to know more than anything is, we're sort of coming to the end of 2023. It's rapidly approaching us. And have you got any sort of tips for investors as we start going into the end of the year and sort of planning for next year? What's your kind of thoughts? And I know it's a scary conversation because we're only necessarily in October, which is the first week into Q4. But, so many people, we're going to blink and it's going to be the end of the year.
Yeah, 10-1 on South Africa winning the World Cup. There's a financial tip. All right, let me be honest around this. I have concerns, and we debate this all the time in the investment committee. I have concerns that the inflationary pressures haven't fully moved into the cycle, moved through the cycle. To me, there are great pockets of opportunity, but particularly in private debt. We've got a lot of private debt opportunities, but the risk you're taking in the listed markets with the hangovers of the high inflation and the high interest rates, not quite doing exactly what we wanted them to do this week. I always look at what return can I get for the risk that I'm taking. And in the space that we're in at the moment, I'm a big fan of yield without equity risk, because I think the markets remain volatile. We're seeing a lot of stabilization. We're seeing a lot of stuff that hasn't recovered yet. But for the remainder of the year, private debt producing 1% a month, 12% per annum over 18 months. We're structuring deals like that at the moment for the market, because we just feel there's such a low risk in deriving 12% a year out of a product or an opportunity like that than the risk you're taking in the equity markets to get 12%. So for the remainder of the year, if you're sitting on cash, I don't think it's a good time to be aggressively entering the markets, even though there is still opportunity. I still think the world's volatile. And I think there's some attractive yields out there. And I think for the risk you're taking for that yield in dollars with the volatility, if you're based in a country like South Africa, I think yield is hard to beat. Debt yields, interest yields at these rates for the risk you're taking is probably where we'll sit for a while still. You don't change your long-term portfolios or sell them down to go into that. those you stick out the long term. But you know, when I spoke earlier of entering, where are you at in the market? I'm not rushing to buy now. I'm really not. I'm quite patient, and I think we need to see the full inflation cycle. I mean, I'm a bit of a bear in the investment committee, but I just feel the risk I'm taking for the yields I can get. I'm not hell bent on the listed markets and the opportunities there for the volatility that could still come. A lot happening in the world.
Just to give you an example, you know, something that you've already shared with our mastermind participants is an opportunity coming up in Germany with a 6.5% income return in euro and a total return IRR of 15%, you know, per year. It's just an example. And the other one was a Manhattan opportunity, which was tied to exactly what you said, 1% a month or 12% a year. And it just, you know, I'll go into a bit more detail later if people are interested. But I think my point being is that those are the type of opportunities that your families are getting exposed to right now. And you know, generally, you know, I have to say, it's so interesting when you look at the world markets. You know, I've been doing this for 20 plus years. I haven't seen two deals of that caliber and that quality in a very long time. And so often when markets are down, you get access to really good deals as well, you know?
Yeah, like it's counter-cyclical, you know. Often there's an 18-month, 12 to 18-month, you know, cycle between private equity and listed markets. And, you know, stress in markets creates a lot of opportunity. So that's why we're seeing those deals. And, you know, I'm never push a single, you know, it's not a product. I'm not interested in pushing a product. But why we structured those deals is because we just feel that private debt, and if you look at the opportunity created by that, you know, like that Manhattan, there's a distress of another business, in this case, the Catholic Church, selling off, you know, assets, which creates a massive opportunity for a very secure deal. And this is the Manhattan deal. Creates an opportunity for a very secure deal with a very, very seasoned, you know, operator. And I was talking about the power of the global multi-family office network. You know, here you're not dealing with a stranger or, you know, a high net worth American coming to South Africa to raise capital. Here you're dealing, you know, with a relationship of 20 years with somebody that was in private equity in South Africa, does this. So it's a very strong relationship to that network. Now, it happens to be families of ours that we manage that a lot of the opportunities come from. So we do like using those. But, you know, even shorter, I mean, when I talk about global opportunity, I mean, even ETFs in cash type instruments right now getting 6%, for example. So if I'm looking for an entry into market on my plan, or I'm looking for entry into a business or something, you know, I want to be able to, I'll take that 5% per year or 6% per year. And then you look at the German opportunity, for example, you know, there's stable tenant, you're getting 6.5% with no risk, and you're upgrading a very simple business and a very simple property. And that's going to give you that lower teens in euro. And again, we're looking at the fundamentals and we're saying, well, the dollar is extremely strong against the euro. So a yield of 13%, you know, in euro on an annualized basis. I mean, what a great return, because, you know, if that euro strengthens against this extremely strong dollar over the time frame of that deal, then you're running into the 15, 16, 17% in dollar, you know, year on year. So we're looking at all the fundamentals, but we don't take risk on unknown parties. And these are very seasoned, very well-known, you know, business partners that we've had for years.
Yeah, no, I love that. And, you know, it just highlights what we feel so strongly about, back to diversification, because now you've got different partners, you've got different countries, you've got different currencies, you've got different assets. And ultimately, you know, so and you've even got different timeframes, because the one is a longer timeframe investment, the one is a 12 to 18-month deal. So it's a classic example of exactly how people should be doing it. And what I love about where the world's going, and as you say, with your global reach, you've got all these partners all over the place in all the different asset classes, you know, and that provides people with the ability to come to sort of a one-stop shop to get the global diversification, but in one place, so that you don't have the complexity all over the place, you know. And I think that's what scares most of us we've all set up structures all over the place, and it's the complexity which bloody kills people, you know.
Yeah, look, I mean, structures are great. You need to know what the trigger point is to put that structure in place. But you know, as I said, none of what we invest in is effectively Calio. You know, we are the architect, and then we find really great contractors throughout that house building process. So this is what's important. You know, you've got everybody else out there. We just bring categorically black and white information that in this sector, in the right proportions, this is a great opportunity for you. And that changes, you know, from time to time, is, you know, and it's all proportions to that asset allocation we spoke about earlier, and having the right asset allocations in the portfolio. But all of these things are, you know, through that network. And that's where your highest risk exists. I mean, you know, Marcus Jooste Steinhoff, your risk wasn't in Steinhoff, your risk was in the operator. And that's why that network is so critical. Now, can you imagine you want to go and invest into something and you haven't got an architect that's done the due diligence or the quantity surveying per se, you know, on that operator? So that's what's so critical about having a family office or a multi-family office approach. You know, you get to the point where all of the information, all of the due diligence, all of the structuring in a deal like that's taken care of the tax already. And that's the beauty of it. You know, we've done the structuring for that deal for our client, which is the actual guy on the other side. So it's a very symbiotic community. And I think that's the secret of the super wealthy. They learn to do business within each other, so that it's very easy to know what you're dealing with. You don't have unknowns. That's the danger of investing, is the unknowns.
Very profound comment you just made there. And it's sort of, it's, you know, that's the negative of why people say it takes money to make money, and, you know, all that sort of stuff. But again, I believe in, you know, to everyone who's getting access to learning from this, you can learn the principles, and that democratization, both in knowledge and access, has happened now. Because not only are you getting the knowledge, but there are ways to get involved, you know, in you know, without having hundreds of millions of dollars anymore, you know. Tell me.
Yeah, well, that's the power of fractionalization and what's happening in the world. You know, you're able to pool communities and capital of smaller amounts very quickly to take advantage of what used to be the domain of the ultra high net worths. You weren't able to access these deals. You know, you had to be in that network. So, you know, our philosophy has always been to open up that network to everybody, and not keep it, you know, the preserve of the super wealthy. Spread the wealth.
Yeah. Let's talk just, I've got two more questions. I know we're on the hour, so I'm conscious of time. In terms of you know, I like to kind of talk real case studies, basically. And, you know, it really sort of exemplifies what you guys are doing. And what I did was I sort of chose two of our clients. I'm not going to mention surnames or anything. But I know that Nielsen them came to join you. They were successful, both entrepreneurs and coming from the medical background. And he actually sent me this article, or not this article, this WhatsApp. And he sort of said to me, you know, Scott, again, that sort of concept of, for the last 30 years, it's kind of been all over the place. But now I think it's better to kind of get one person and to, you know, bring in all the different asset classes. I don't know, you know, for me, this sums up what I'm talking about earlier, which is that whole simplification is power, and how it's kind of better to deal with one architect with, let's call it, and again, I'm going to use your metaphor here, many different, you know, contractors and subcontractors and whatever, which is perfect, but you still kind of got one architect in that process. And I think so many people miss that. Is there anything that you want to share around this? Because I've been fascinated watching the journey that you've gone on with them, and how you've not only simplified it for them, but also kind of given them the peace of mind to know and to bring it all together in one cohesive plan versus a fairly unstructured plan, you know?
Yeah, well, so this one, we're still very much in, you know, that structural side and the governance side. You know, we have identified, you know, certain, like, it's become a complex portfolio to run because of direct ownerships and issues like that. So this is where, you know, it's often easier to have somebody else running the actual properties and the complexity and just being part of that. But, this was a great example of certain things were done without the full consequences of the purchases being understood and the global tax. And it's not, what's important about that statement is we are a team. So this has been a classic example of the team work of Calio. So Calio is the architect. The difference here is you've got a lot of collective knowledge, and you've got that knowledge being implemented through one plan, and you can see that plan. But they've now got an entire team, and that entire team is no longer made up of a single financial advisor that had an opinion on the day. And I see this in a lot of a lot of portfolios. You get an opinion, and that portfolio is structured like that. And then there's another opinion, and you do that. So you pick up these pieces of opinions. Whereas now it's a lot more black and white scientific, and these are facts. We start with structure. We'll start looking at the risks of the current investments, and we do the asset consulting understanding. Now, what I'm very focused on here is a big capital event that can happen, and working out the timeframes, because I'm busy actually doing this full asset map and drawing the blueprint. So what I'm particularly interested in here is there's a large capital event that can be triggered by two factors. One is the risk of death, touch wood, and then the retirement. So those are two different factors with two massive capital consequences. So these are great live examples of how we will spend our time planning, so that ultimately when we put the roof on this house, we haven't missed the walls. Okay, so this is a great example of it. And, I said those exact words. I said we need time to plan and get everything right, so that the remainder of this year will really be about positioning this portfolio, studying. The portfolio studies have been done, and we're making some changes there, but really knowing exactly where we're going and when to execute where we're going, at what time frame, and what quantum will we execute that. So that's the process that the whole team's working on at the moment.
Brilliant. There's another example that I wanted to share, and I wanted to share it for two different reasons. So in terms of the collaboration, you said, and I've sort of mentioned already, the 1% can pay for advice and get results. We need to support everyone else to get access to the same advice and results. And I wanted to ask you how it makes you feel when you see something like this. So Cynthia sent this, and I actually asked if I could share this, and she said yes. And I love this story for two reasons. The first one is that some people think, oh, but I'm not in South Africa, this can't work. Well, Cynthia's American, literally lived in Hong Kong for 20 plus years, and now lives in Italy. So has, other than being to South Africa on holiday, she got no connection with South Africa. And yet, I love this when I got this, she literally said something along the lines of, and you can read it here. She had an issue with her ex-husband, and her kids were going to university, and Calio helped me put, me into a 3-year promissory note. I'm sure that many people don't even know what that is. That's why you need to do asset class mastery. And the dividends have allowed me to, literally be able to do the uni without, having to worry about it. The ability is so liberating, not just to making ends meet, but to have an unexpected huge hit not derail me financially. It's the first time that happened to me in 10 years. Thank God for the mastermind, the partners it brings us, and the exponential learning curve you've gifted us. And I just, for me, God, when I read that, and that gives me goosebumps just reading it now, it's more than just the money. It's really empowering people with not only the knowledge, but things that they didn't have previously. And again, I don't know if you want to talk or if there's anything you want to bring up around this, but I just wanted to bring it up for two different reasons. One was, the fact that it's not all South African. This lady's based in Italy. But also, secondly, the personal impact this can have on people's lives, and quite quickly as well,
Well, this is a great example of the multifamily office having offshoots that can serve many people. So what I love about this story was the education that came from your side, the introduction which came from your side, which enabled a person that would not typically get access to us, to something that was customized and very, very personalized to solve a problem. Now, this is just one problem. When we deal with a family, we can have 50 different problems like this where we apply. I just think this is a wonderful example of how a solution was customized and was available to solve a problem. Okay. And there was, and I'm going to speak very openly here, there was no commissions. There was nothing in this but putting this in place and, earning a fee with Cynthia from what she makes. So she makes her portion and we make a small percentage of that portion to solve the problem. That's symbiosis. That's symbiotic. That's beneficial, making money together. Not me making money out of you and you the disillusioned person at the end. But I think more importantly, when I spoke of that 1% getting access, this is where I like the Wealth University, because it's serving a purpose which I like, and that is making us available to a much greater audience than the 10 clients, families that phone me a year and join us. Those very high net worths. So I think this is great because it's created a wonderful partnership in education and access. And the fact that I'm based in South Africa, means nothing. I mean, we're far more global than we are South African. In fact, we've got a lot of South African private equity, but we're a global firm. I've got a client in Portugal right now, has never set foot in South Africa financially or made money. He lives in Portugal. We moved him from Madeira in Spain to Portugal because it was more tax efficient. And we're now transferring his wealth from America into the Portuguese system. It's taken us 24 months to do that planning. We've now moved this $30 million into Portugal because, it's foreign income. And, one of the best pieces of financial advising was moving a few kilometers in Europe to have no tax for the next 10 years and to get out of the American tax web. So this is just showing the extent. And why I tell you that story, not to, move away from Cynthia, but I tell you that story because it blew my mind that the guy said, I've lived in a global environment, but I've never got the advice on how to do this in Europe. Instruments we use. And this is all I'm saying is, like, if you don't know it's out there, you can't use it. Okay. If you don't have access to it, you'll never, ever be able to do what we did here and actually creates a higher yield. And this is not a ridiculously high yield. It's not too good to be true. This is a very reasonable yield. And it's a very explainable yield. And a promissory note for everybody out there is just the US version of a loan. Promissory note is a loan. Okay, so it's a loan instrument. And I remember meeting Cynthia very well. And it's great to be able to change things like this.
And I think just to give some context, and you sort of alluded to it already, because it's actually my final question, was just, why this partnership, why are we doing it? And I think one of the things that amazes me is that you've helped, we've got clients in the mastermind from Ireland, England, Italy, Germany, Australia, even, South Africa, yes, Zimbabwe, Zambia, Swaziland. so it's a very wide array of people. And I think one of the reasons that I just wanted to kind of bring it up for people was that it's not sort of regionally or stuck in a geography. And I go back to what you said right in the beginning. There's the globe, and that's the kind of the focus from a diversification. The final question really, and you have sort of mentioned around the education, and I think to some extent you've already covered this, because it's also the fact that, where you were reaching 10 families, say, a year, you now have the ability to reach wider. Is there anything else that you kind of want to add to that, or in terms of it, or have we sort of covered it?
No, look, we've covered it. I just want to reiterate that point that I think, if you can create a business that's educating, 1 million people, you're creating the resolve to one of the world's biggest problems. And that is that the wealth is held in the hands of a very small percentage. And that distribution of wealth has to happen. So one of the ways of doing that is these synergies. And the world's, investment in global wealth management preservation is now global. And eventually people are going to be able to do in Italy what they do in South America. They're all going to invest the same. It's like saying a person in South America, New York, Australia can't buy the MSCI, which is the Morgan Stanley Composite Index, the global index. That's what will happen is people need to, and millions of people need to be able to access global economies and growth economies, not just the big listed companies, because that's the only way we're going to create real impact. Only way we're going to create real jobs is investing into these direct businesses and growing these businesses through the connectivity. So I think you short-circuited something that we were doing and were going to do. And I think you've done it extremely well, and that's global reach and taking that impact investing, which is Callio's biggest philosophy, is to create, not just get rich out of, buying shares and then going up. We want to create, and we want to know the impact that we've had. So I think you just fast track that. And I think you've done a great job of putting together the content of this, and I think it's a valuable education for people out there, and it's a sophisticated but understandable education.
Yeah. No, I really appreciate that. Well, look, God, thanks so much for your time. It's been wonderful, and I've taken lots of notes here. I remind people, we've spoken tonight about the multi-family office concept, and the fact that you can get, what one family in the past could have now, many families can sort of share and actually get access to better results. You got the multi-generational wealth. I love the words you said around radical planning. I think that's so important. Some of the principles you shared around wealth management, primarily around protecting wealth, structuring, governance, understanding what assets they have, and then the multi-level planning. Knowledge is everything. The human element is so important, and it's actually becoming more and more important. Just because you can able to do something doesn't mean you're enabled to do it. Sorry, the other way around. If you're enabled to do it, but you're not able to do it necessarily. You really want to be, have someone that's managing your money, or your money working for you when you're not working. Some of your tips for 2024 were, return for risk taking and yield without equity risk, and roughly 12% a year. And stress in markets creates opportunity. And I think just some of my, takeaways that I thought I would share with people, which I deeply appreciate you sharing with everyone tonight.
Scott, it's always a pleasure. I do apologize. I've had a long day. I've been up, I was in the Natal Midlands earlier. So yeah, I hope there was value in it. And yeah, it was nice to have a very open conversation, because truthfully, that was the first time I saw the questions when they popped up here. So yeah, I don't know if there's Q&A that you want to go through, or any answers. I just did answer a question about what Callio means, just out of interest. And just for people who are wondering what the word Callio means, it's the Latin word for the flame within. The spirit of a human, the internal flame that keeps burning, that drives a person, just out of interest.
Brilliant. Well, look, what I want to do is I do have, there are some questions and everything else, but I just want to pivot. A lot of people have asked me sort of, if they're interested, what would be the next steps? And I want to pivot into that. I'd be very welcome to stay on, or if you want to jump off. I've looked through all the questions. I can answer all the ones that are here. In terms of where we're at. So I'd love to just pivot in terms of the next steps if people are interested in terms of that opportunity.
Okay, for it. I'm here I can stay for another 10 minutes.
Okay, perfect. Well, let me run through it quickly. So just a couple of things that I want you to think about based on everything you've learned from Garth and what he shared tonight. The first thing is, that whole Einstein thing. What's the definition of insanity? And it's doing the same thing over and over again, and expecting different results. And I think the challenge is most people, kind of want to, like, they're pretty clear on what they want to do, but they're not sure on the how to. And a lot of what we've shared tonight is some of the how to, but the question is, how do you go deeper in terms of that? And, I love this picture. Often when people talk about wealth, and even when you talk everything we've talked about tonight, people feel overwhelmed. It's like drinking from a fire hose. It just feels like too much. And I started off this evening and I said to you, what would it mean to you in 12 months or less if you could build $5,000 passive income? And someone asked me, is that per week, per month, per year? And I said, it's irrelevant. It's whatever your plan is. It could be per week, per month. It might be 5, it might be 10, it might be 50 in terms of that process. The second thing is, you've probably already seen tonight, there are systematic and scientific ways that you can actually do this in terms of formulas, so that you can do it faster, simpler, and safer in terms of the process. And I'd love to just share with you over the next 10 minutes or so, an opportunity where you could come on this journey for the next 12 months. You could partner with myself, you could partner with the team at Callio, and actually we'll hold your hand in terms of being able to take you, through this journey for yourself in a personalized approach. If you remember, I started off and I said it's about living life unlimited. And how do you do it? You do it through diversification 5.0. And the simple formula is about building globally diversified passive income. That's the goal. And it's about diversifying across countries, currencies, assets, partners, and time. Now, I've had the privilege of being part of masterminds since 2011. And I really wanted to share this little video with you because I thought this would be incredibly valuable for you to share what's worked for decades and centuries already in the past.
Now, this is extremely predictable. There's tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So, I mean, if I just put that up on the screen, humans change 5 times faster in groups than they do with a one-to-one coach, consultant, or therapist. If you put a collection of people together who are committed, all driven, and all so badly want to make the changes, and give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start to see real, rapid life and business transformation. And that's really why we created the mastermind, because we realized, and I've done this for 28 years, the same problems were coming up over and over again in terms of how do we solve it. And so we basically created something for people that are into personal development. They want to learn, they want to grow, they understand personal development, and they're coachable and basically have a growth mindset. The second thing is that it's about passive income. They want to build globally diversified passive income. I tend to joke with people. I had one person in East London that wanted to buy houses and fix and flip them. Another person that wanted to do crypto, and that's fine. There's nothing wrong with that, but that's not globally diversified passive income. And the last thing is that they already are a property or investor. This is not an entry level or a beginner. This is for people that already have some sort of portfolio, some sort of property that want to ultimately get going. And, I've shared with you the formula of how if you bring like-minded people together and you put them in the right environment with the right leaders and the right skill sets, then, they're going to get there a lot simpler and safer without the hassle and complexity. Who's it not for? It's not for complete beginners. It's not for time wasters. It's not for people with no capital. And it's not for difficult personalities. At the end of the day, as part of the group, we collectively moving to, towards it. And just like any golf club, it only takes one person to kind of mess it up. So it's about, making sure that the right people are part of the mastermind. And that's the formula. That's what we are looking to achieve. That's how we're looking to achieve it. How do we do it? We fundamentally believe that simplicity is power. And so there's 5 simple steps that we take people through in terms of the process. The first one is the outcome. The second one is the starting point. The third one is that we create the wealth plan. The fourth is that once you've got the plan, it's all about the accountability, the mindset, and the execution. And the fifth is that it's about the investment. And so let me take you through this in just a little bit more detail so that you understand it. The first is the outcome. So I sit with you one-to-one, and we get very clear on what are your top 3 outcomes. I literally sat with an entrepreneur today, and he said, I've done this for 40 years, and I've never actually taken the time to sit down. And so I take you through a guided process. I'm a globally accredited coach to take you through this process. And I get very, very clear with you on what are the top 3 outcomes you're wanting to achieve, what are the top 3 measures you're wanting to achieve, and then we write them down. So you get very clear on where you're going. We call it the lighthouse approach. So, most people are caught up in problem and drama. This is not even down to brainstorming and action. It's what is the outcome you're trying to achieve. And funny enough, there was a person in Germany. He's been a coach for 27 years in the financial space. And he actually said he loved the process. It's just where people take 90 minutes of their time to 2 hours, and they get very, very clear on the top 3 outcomes they're trying to achieve. Then we move to the starting point. And the first step is a property analysis. There was one of the mastermind clients in the UK. He had bought a whole bunch of properties before the last crash in 2007, 2008. And it's always interesting with a coach or family office, as we've spoken about, because they provide you with a mirror. And, you know, he had all these properties, and a lot of them were bleeding cash now with interest rates up. And within half an hour, we were able to show him how he could keep some properties, sell some properties, take some equity out of one of the performing properties, sell off the negative equity properties, and ultimately change his cash flow position from something that was costing him £1,000 a month to where he actually had an additional £2,000 a month, and he could now start diversifying and investing in America. So it's just an example of understanding what is your current portfolio. The second part, and you've already heard a lot from Garth tonight, is where you work with the team at Callio. And, you know, you've seen this tonight in terms of that process, and they sort of sit down everything that Garth's spoken about. And I'm going to just remind myself of what he called it, radical planning. And my logic is, you know, you get clear on where you want to go, the outcome. You've got to get very clear on the starting point. Then you go and you create a wealth plan. And there's different levels of that wealth plan. We've got a fairly basic wealth plan where it can literally be put on one page, where you get very clear on your why, your what, and your how. I know the team at Callio go into a more in-depth one in terms of the pros, but in simple terms, you know where you want to get to, you know what your starting point is, and you have a plan to get from A to B. The challenge with most of us is that we don't even have a plan. But for those of us that do have a plan, and again, this has been my experience, is that if you look at just basic New Year's resolutions, 9 to 12% of people actually achieve their New Year's resolutions. And you know, literally those are the ones that are written down. The ones that aren't written down, it's less than 4%. And so even when you've got a plan, it's about the accountability, the execution, and the mindset. A lot of people get caught up in this away state. They're withdrawn, they're fearful, inability to make good choices, demotivated, particularly in where the world markets are at the moment. And it's about being in this towards state, being happy, ability to think clearly, creative, you know, seeing new opportunities. And how do you do that? Well, you get a like-minded group of people that are pulling you in the same direction, and you have a plan like we've already discussed in terms of that process. So what we basically do is on a monthly basis, we check in as part of the mastermind. We work through the mindset. We've got different modules on time management, mental wealth, flow, but most importantly, it's about the accountability tracker. You know, I've learned with Roger Hamilton, I've been part of his mastermind for over a decade. I would turn up every month, and every month I said I would do my top 3 things, and I would check in. I'm on track, I'm off track. It's a bit like if you went to school or university and you kind of had to do your homework. It kind of keeps you up to date. And by the way, it's not about the amount of time, it's about making measurable progress every single month towards getting your goal. And then finally, the accountability coach. Some people say they need the carrot, some people need the stick. Most of us need accountability to make sure that we are holding ourselves to account and we're making measurable and ongoing process every single month towards our goal. And then step 5, which is the final and most important step, is the investment step. There's 5 rhythms, and this is what we run every single month. And, you know, again, we do this live, and it starts off with Anthony from Callio, and he comes in and he gives us a market synopsis, and he takes us through what is actually happening, what's happening with all the different asset classes, what are the key things that we need to know for that month around the world in terms of inflation and interest, et cetera, et cetera. And ultimately, it helps people with their portfolio construction. Then we go to financial understanding, and that's where I bring in one asset partner. So in one asset class every single month, and about 90 minutes every month, and we learn about an asset class, whether it's industrial buildings in America or London residential or gold and silver or structured notes, multifamily, etc. This month, funny enough, we've actually got the team from Callio coming to teach us private equity. Last month, we had ETFs. You know, so every month, it's not at the end of the 12 months for you to be an expert in everything. That's not the intention. What it is, though, is to have a good, solid understanding of each asset class in terms of that process. And, you know, if you look at just the feedback from people, even Niels, who I mentioned earlier, you know, he said here, all of these different Zoom meetings has made a huge difference to my understanding. I don't feel stupid anymore when having discussions with the likes of Callio. Of course, I don't know enough, but at least I can follow their opinions and comments without being in the dark. It's so liberating. You can see all the other comments from people. There's so many, mind-blowing, you know, very valuable. This perspective is very valuable, extremely enlightening, etc. in terms of that process. And then it's ultimately about investing and, you know, and looking at deals. And this was a deal that we invested in at the end of July. It was an industrial deal in America, 7% cash on cash, 17% IRR, roughly, 2x multiple if you put your cash in. So roughly an ROI of about 20%, and it closed at the end of July. And I did actually have here, and I'm not going to share these publicly, basically, but just an example. This was the deals that Garth was talking about. So there's literally one in Manhattan, there's one in Germany, and these are the type of deals that our mastermind participants are getting access to and actually being able to invest in, so that they're building that globally diversified passive income. And then finally, at the end, you return back to step one, because you should be reviewing your portfolio every year, and ultimately you go through the 5 steps back to step one. According to Harvard, if you just walk away tonight, from 3 months from now, you're going to remember about 10% of everything you've learned tonight. And yet, actually, what's important is that if you do it non-directive, if you actually learn while doing it, you're going to retain 95%. That's our thing. I know that, I don't want you to give me $1 or give Calio $1 and we turn into 2 and you're not empowered in any way. What we want to do is measurably move you forward in the next 12 months in terms of that process. And that's what the diversification mastermind is all about. And I'll give you a story on this. A gentleman called Michael came on a buyer's trip, 10 years ago, and it feels like I'm talking about 100 years ago. But in those days, you had to, you came to a live breakfast, and then you got on an airplane, you flew to America, and you came and bought property. And we used to do these buyer's trips, and Michael was very skeptical. He thought it sounded too good to be true to be able to buy in America. But he also knew he had to diversify. He knew he wanted to externalize as well. And so he came on a buyer's trip. He spent $2,000, paying to come on the buyer's trip, another $5,000 to get to America and to come on the trip. And I'll never forget, he was so clear with me when he was there that he had 2 daughters and he wanted to give them wealth preservation. He wanted to give them the freedom that wherever they wanted to go in the world for university and where they wanted to live, he could do that. And it's with a huge amount of gratitude that 10 years later, him and his wife, Lee, are immigrating to England, and their daughters are going with them. They both are educated and getting educated in England, plus they've got the ability to live in England. It's a classic example of where you take what Garth's spoken about with radical planning, you execute, and 10 years later, it gives you the freedom. And, as Michael said, when I joined, it was the best money I ever spent. And he also went on to say it would never have happened if I tried to do it myself. And I think that's such a key point in terms of the overall process. And, what's the difference between Michael and probably hundreds, if not thousands of people that sat in those breakfasts? Because everyone got the same knowledge, everyone got the same opportunity, but very few people took action. And I always ask people, would you like to be like Michael and his wife Lee in 10 years' time? Well, there's a difference. They took action today that they gave them that freedom sort of 10 years later in terms of that process. So just some of the bonuses of being part of the mastermind: you get access to, priority access to myself and the team. You get access to the tax and currency partners. You get access to asset class mastery. So we've done already a number of the different asset classes where it's all in the library and you can literally go and learn it in a home study environment. And if you look at the different asset classes, there's still many more to go. We're doing private equity this month with the team at Calio. We've got venture capital coming. We've got multiple different asset classes that we consistently run through on a monthly basis. Then I mentioned tonight, Wealth Going Global. This was a home study course that we put together where you can literally learn and build your own wealth plan, your own investor strategy sheet, and get very clear on the top 5 countries to invest, the top 5 currencies to invest, what are the top 15 asset classes to invest in, how do you find the right partners and avoid 80% of the mistakes that other people make, and ultimately, how do you build a portfolio over time? And there's 6 different modules that you can literally get access to in terms of Wealth Going Global. There's Clem Sunter. I actually interviewed Clem Sunter live, and he gave us, recently the latest scenarios for the global economy, including the South African economy, which will give you access to our Wealth Hacker community, which is all the substance. It's a lot of information, a lot of knowledge, but it's the substance that people have access to. And then for people that want access to immigration, equally, there's partners that people like Garth and I have been working in the space for a long time. And so we kind of know who the right people are to speak to in the right markets. And whether we do this again or not, there seems to be a growing demand for people going back to personalized face-to-face and actually getting on an airplane again with me and flying over to America, flying to England, flying to Europe to actually go and meet the partners on the ground. So how do you apply? It's very simple. It's you go to this link, diversificationmastermind.com. We'll set up a one-to-one call, you and I. It's about a 30-minute call in terms of the process, and it's either myself or my partner, Alex. And we just want to understand where you are, what you're trying to achieve. We also want to make sure that we understand what the risks are and what the opportunities are. And specifically for us, we're trying to see if there's a synergy. Is what you're looking for? Can we help you solve your problem? And secondly, do you qualify? Like in terms of what we're offering, does it resonate with you from a symbiotic perspective? It is, only for committed people. So I do ask people, my time is valuable, your time is valuable. So if you book a 30-minute call with me, literally please turn up on time and make sure you use that slot in terms of that process. And then finally, as you've probably realized, this is quite a time-consuming exercise between myself and the team at Calio, etc. And so we can only onboard a couple of people per month in terms of this process. So it is limited. I meet with everyone individually face-to-face because it's very important to make sure we're getting the right people to be able to participate. But equally, don't, what's the word called? Don't kick yourself into touch and think you might not qualify or something like that. Let's have a conversation. You'll be surprised how Alex and I have been able to help people find solutions for what they're looking to achieve in terms of that process. So if you are interested, literally go to the link, diversificationmastermind.com. I know I've made some slots available tomorrow afternoon. And if the times don't suit you, if you just want to type in the chat box, mastermind, and we'll find a time that suits you, or we'll make a booking for next week in terms of that process. If you're talking return on investment, the average return is roughly 344% from coaching and over 700% for businesses in terms of the coaching. And although I can't guarantee you the success, I think if you know me well enough, you'll understand that I'm a 150% person. I'm going to do what it takes to help you get the results, whether it's the carrot or the stick. And I know a lot of people really sort of resonate with that. And I'll finish with this final comment, which I think is important from a return on investment. And interesting enough, this client had $12,000 invested, and he was with a company called Allen Gray, and he was earning about a 7% return. And what was interesting, I had a chat with Anthony, and we sort of said somewhere between 14 and 15% on average if you take all the different investments. And I sort of said to him, well, if you were to invest, $1,000 a month or roughly $12,000 in total, and you were to invest $5,000 in yourself, so you invest the likes of $5,000 to be part of the mastermind, what difference would it make for you? And over 1 year, if you take the time value of money, it's not worth it basically in terms of the process. But if you take it over 5 years, it's starting to become a ROI of sort of 2.5 times in terms of that process. If you take it over 10 years, it's sort of becoming 10 times. And, if you take it over 30 years, it really becomes, extrapolates tremendously. And this is the huge power of access to knowledge, access to partners, access to opportunities, and the time value of money in terms of over what people are getting through getting the right information, getting the right partners. I just want to share with you some funny pictures here, again, of how we used to do it 10 years ago. If you're interested, the link is there, diversificationmastermind.com. But, this was us 10 years ago in New York, flying over there to go and find buildings. Funny enough, Garth, when I invest in your Manhattan deal, it will be the first time I've been able to invest in New York. And I've been going to New York to invest in New York since 2011. We've never once been able to find a partner on the ground that we could trust. And yet, now we've got a partner in Manhattan that, with yourselves that we can invest with. This was us in Times Square. This was actually Dolph DeRuis. I paid $8,000. Some of you will know this book, Real Estate Riches. And I paid $8,000 to be part of his mastermind way back in 2011. And this was us on the steps in Phoenix of the courthouse, actually buying properties. Literally, believe it or not, these were the auctioneers on the steps of the courthouse. We started in the residential space. We had a bit of fun on some of these buyers trips. We started buying houses and, all the way through from houses to multifamily. We used to, in those days, have to open bank accounts overseas. But it was all about learning from the partners. And you can see here, it's the same formula. In the old days, you had to get on a plane and fly overseas to meet the partner and learn from them. now you can do it all from the comfort of your couch, which is so powerful in terms of where the world is going. And also having a bit of fun while we were in America in terms of that process. Up in North Dakota, where a lot of the fracking is, in terms of that process. And these are some of the wealthiest shopping center investors in the country. And again, they knew that you don't go somewhere and try and do it on your own. The best way to achieve something is through partnership in terms of that process. Why we believe you should work with us? Well, again, I've heard many, many excuses. I've done this. I've helped people in 171 countries around the world. But in simple terms, there's 3 myths that people have. The first is that they don't have the time. The second is that they don't have the knowledge. And the third is that they don't have the money. For me, when it comes to time, the mastermind has been created for people that are time poor. It condenses decades into days. And I often say to people, if you don't have 3 to 4 hours a month to ultimately achieve what you want to achieve in the next 10 years or so, you're never, ever going to get there. So it's not about a lot of time. It's about condensed time. It's about quality time. It's about quality information. The second thing in terms of the knowledge, again, it's curated knowledge. There's plenty of knowledge out there, but it's getting the right partners, the right information, the right knowledge, so that you do get access to the knowledge. And finally, if it comes to the money, it's one of those things when you look at it from a return on investment, what is the impact of bad information, bad advice, bad strategies? I know for me, it was, many, many years of pain and problems and frustration. And by partnership, I was able to dramatically change that in terms of that process. The last thing I think which is important, and you've heard it from Garth, is that global diversification. Most people are going to try to stick you in a box. They're going to try to sell you a medical deal in America. They're going to try to sell you a house in England or Birmingham or Manchester. They're going to try to put you in the stock market, or whatever. It's whatever they try and sell. But for us, it's not about one strategy. It's about global diversification. And, I singularly believe so much in masterminds. I went on my first one in 2011. And these are the amounts I've invested myself. Singularity University, I spent $14,000. Roger Hamilton's Crystal Circle was $25,000. Mavericks was $40,000. That actually enabled me to meet Richard Branson. I spent 2 weeks on Necker Island with Richard Branson, and finally $50,000 with Tony Robbins in terms of his business mastery. And people look at me and they go, Scott, you're absolutely insane. You spent $50,000. And yet what I learned and the people I met through that process, I made that money back many, many times over the years in terms of that process. So if it is something of interest to you, it's a simple process. You literally go to diversificationmastermind.com, you book a call, you and I sit down one-to-one, and I want to understand what you're trying to achieve. And if I think I can help you in terms of the process and the partnership we got with Garth and his team, then I'll explain more about what we do, and we can see if there's a synergy. I do ask only for committed people. So please, if you book a time, please make sure you turn up on time and use your time effectively and my time effectively. And then it is limited. There's only limited places, which is why I interview everyone personally. Once we got out of the residential in 2014, we started evolving into the commercial. We did all of this through partnership. These were medical buildings in Atlanta. This was us sitting around, investment committee meetings. This guy, Paul Sherlander, we did 7 buildings with him, highly effective medical buildings, and exited all of them effectively. This was another medical building we did. This was a buyer's trip in Hong Kong. We never ended up investing in Hong Kong, but we were over there meeting with partners, more medical buildings that we've done. But, I think you can probably see over and over again the diverse, broad and breadth of experience. And back to the satisfaction, I can't guarantee you I'll get you the results, but I can guarantee you I'm going to move heaven and earth to help you get those results between ourselves and our partners. And just some comments from others. Justin said, Scott and his team deliver a clear and easy to understand content. The course delivers loads of eye-opening lessons, which are revisited in every module, drumming in the info so it sticks. Doing the course has definitely been a turning point in my road to financial freedom. For the first time, I feel like I have direction and a team to back it up. Victor said, I enjoyed the exposure to all the detailed information in each section. The information in each section was way beyond what I expected and I had any knowledge of. In short, I was blown away. Once my eyes were open to the wealth of information and the opportunity through the platform to access these markets. I've always wondered how to achieve access to these markets. Now I know how it all works and how to be financially free. Thanks, Scott and the team. Cynthia, we've already discussed Cynthia, but again, to remind you, she said, thank God for the mastermind, the partners it brings us, and the exponential learning curve you have gifted us. And Gerard said, learned more in 6 weeks than I've learned in 20 years. And so in conclusion, if you want to do it all yourself, you're very welcome. Hopefully the message that you've heard loud and clear from Garth and I tonight is that, you could try do it all on your own, but you're going to probably get a hell of a lot further through partnership. And there's a great African proverb that sort of sums it up. And it says, if you want to go fast, go alone. If you want to go far, go together. And our invitation here is, if you want to come on a journey, if you want to be in a partnership, then let's go far and let's go together. Those are my details for anyone that is interested. I'm much better on WhatsApp than I am on email in terms of the process. And just in terms of some regular FAQ questions that we get, there's a lot of value that is built into this. And what our primary goal is to make sure that someone is getting at least $5,000 passive income per month. Many people have much higher aspirations, but that's the minimum goal in terms of what we are trying to achieve. So if that's something that interests you, and you believe that you suit what we're looking for and what you're wanting to achieve, then I would book a call. I'm not sure if I qualify this. I do have investments, but I'm not a sophisticated investor. It's interesting. Some of the people that are part of the mastermind are highly qualified accountants. We've got entrepreneurs. We've got highly successful business people. We've got teachers. We've got an electrician. We've got farmers. So it's not so much about the sophistication. It's about the passion and the real drive to build globally diversified passive income. And I think what for me is really important is rather have a meeting and understand where you're at. And if we can't help you in the mastermind level, there's other opportunities that we can help you for. So again, just go to the link here, diversificationmastermind.com, and we'll be able to assist you with that. I'm really busy and time poor. How much time will this require? As I said to you, roughly it takes a bit more time up front, obviously in the planning section, but no more than 3 to 4 hours a month in terms of the actual execution, which I think is really, really important. Why should I invest money in the mastermind and not just in the investment? Again, whether Warren Buffett says the greatest investment you can make is in yourself. Garth tonight spoke about how knowledge is so important. For us, it's about combining the two. It's about having the knowledge, it's about having the plan, and actually using the investments as the vehicle to get to your outcome versus just having an ad hoc approach in investments. How can I use Wealth Going Global? And is this part of the mastermind? As I said to you, it's a 6-module course. You can take 6 weeks, which is our recommendation. You can take 6 days, but ultimately, yes, it's included in the mastermind so that you've got the foundation. Same with asset class mastery. Again, all the different modules are there and you've got it and you'll have it forever so that you can do it over and over again, should you wish. Is this South African focused? No, I've already mentioned that. We've got people from Ireland, England, Americas, New Zealand, Australia, Italy, Germany. There's one other in Europe. Anyway, and a bunch from the southern hemisphere in terms of that process. Why should I join the mastermind versus doing it on your own? Again, if it's worked for you completely on your own, then continue that. But if you're wanting to build globally diversified passive income, if you're wanting to get access to quality partners, Garth's spoken so much about the global network. If you're wanting to get access to that and not have to go and try and figure out how to do that all on your own, it'll probably take decades, quite frankly, based on my own experience. Or you can do it in partnership through the mastermind and you can really accelerate time and do it a lot more simply and safely. What is the relationship with Calio? I think hopefully tonight that one has been answered. But in simple terms, one of the reasons I wanted to partner with the team at Calio was, I had someone actually ask me, they were a farmer, and they said, well, I've got my whole farm and it's in a trust. Can you help me with tax and structuring? I was like, dude, this is not what I do. So it's an amazing synergy because they bring all of the advice that people need, and that's what they specialize in terms of that process. I can't make one of the available time slots to see the team. What options? Again, just type in their mastermind. If you're watching the recording, reach out to us. We'll make a time that's available for yourself and myself in terms of it. And then finally, I really need accountability. Will you help hold me accountable? And I think this for me is something that we all need. I know that I'm an A-type producer, top producer, whatever you want to call it. but I'm always much better when I got an accountability partner. And that's what it is. It's about an accountability framework. It's about an accountability group to be able to get the results measurably and predictably in terms of the process. And then finally, do you have a payment plan? Look, more than 90% of people don't take the payment plan, but there are some options if people have unique opportunities. So just reach out to us and ask us in terms of it. And that, ladies and gentlemen, is everything from tonight. I know that I've gone a bit over time, so I apologize for the length in terms of it. I just want to see here quickly. There were a couple of questions that I promised I would answer, and I think I've answered most of them. But someone anonymous asked me if this, if the passive income was weekly, monthly, or periodically, or annually. I've answered that. It's really whatever your wealth plan is in terms of the process you're wanting to build. Is there spreadsheets that show the opportunities on offer? So again, yes, when opportunities become available, we make them available to the mastermind. We go through the deals. We actually often hold a webinar to be able to take them through it and to show. But again, the opportunities come up, and as Garth has mentioned, we've only spoken about 2 tonight. There's many other things that they do in terms of the overall portfolio construction for people. Where can I access the recording? So we'll send the recording out to anyone. What wealth value will Calio consider setting up the family office for? So my suggestion is, whoever that was, anonymous, set up a one-to-one meeting with me, and then we can take you through it, and I'll help you in terms of the next steps of where and how to move forward. And Delia said, where are these deals you're speaking of? Manhattan and Germany, examples Garth mentioning, are these on the Wealth Migrate platform or accessible directly via Calio? So again, Adelia, I know that you're a client you joined the mastermind and you're a member of Calio. So we'll certainly be able to give access. I know Garth and I are working hard on ideally, hopefully in the near future, getting these onto the Wealth Migrate platform. But there are going to be deals, through the mastermind that are going to be off platform, because you got to move very quickly in terms of some of the deals, and some deals just are not available. And then what does Calio stand for? Garth has actually answered that in terms of that process. Betty said, thank you very much, Garth, in terms of your time. I am just trying to see if there's anything else that I haven't answered. I think there's a huge amount of thank yous for you, Garth. I don't know if you can see them all. And Alex, thanks for putting in the links. Garth, I didn't expect you to stay till the end, but that's everything from me. I think we've answered all the questions. And Luzoko, how do I start a wealth portfolio? Probably the metaphor that I'd like to give everyone is that none of us learn to walk by reading a book or coming on a webinar or masterclass. So at some point, you've got to stand up and start walking, but there's lots of solutions. Go to the Wealth University. There's a lot of free resources there. And depending on where you're at and what your level of investment is, there's different solutions that have been built to help people in terms of that process. But Garth, thanks so much for your time. I deeply, deeply appreciate it. And yeah, now you've got a sense of how we're inviting people to be part of the mastermind.
Yeah, I've never stayed beyond the initial, but yeah, absolute pleasure, and it was very interesting, and yeah, great to help there.
Brilliant.
I'm going to check out there.
Thanks, everyone. Have a wonderful evening. I'll stay
Thank
online
you.
if there's any questions, but yeah, thanks, Garth. Thanks, everyone. And Gareth and Alex, thanks for setting up.